Bill Baruch of Blue Line Futures joins us now from the CME. Bill, look, Friday we thought we had a deal. We thought we had some breakthrough between China and the United States. We all get to work on Monday morning and we're not quite so sure. What is the sense up there at the CME? What are people talking about? And are they encouraged in any way to take more risk on, given the confusion?
Look at on Friday, there was hopes of an interim deal, some cold water getting poured over that late on Friday. Comments, yeah, of course, China coming out here today as expected and really saying they want to talk again before signing a phase one deal. Listen, there's a lot of resistance up here in the equity markets. It's been a good run, but it's still a very headline-driven market, and we're at the top end of the range, which happens to be record highs right now. So it doesn't make sense taking additional risk at these levels.
Bunch of things that obviously contribute to what's going to go on in oil prices as well. Is this a rally to fade? Has this been a rally to fade?
Absolutely. It's been a rally to fade. We came off $50. I've been a big bear on crude oil. And on Friday, ahead of the weekend, there's some uncertainty. What could happen with the U.S. and China, as well as the Iran attacks. But ultimately, there's ways to play crude oil. We were getting short futures, and we were doing some buying call ladders to protect our upside. Coming out of the weekend, knowing what's happened, there wasn't as many question marks. It's a big open door to sell crude oil. I think we're targeting $51.50 in the near term, but $47.5, $48 in the longer term.
Okay, at 47, does it go lower than that? There are a bunch of factors out there you could argue. Demand is still tough. Look, if China and the U.S. don't get a trade deal, these tariffs stay on. The manufacturing sector is really going to struggle. The global economy is going to struggle. Why 47? Why not down from there?
Oh, absolutely. We could go a lot more. And we've seen some decent China data on the imports for crude oil specifically, but the broader numbers were horrible last night. We have inflation coming up tonight, and then we have IMF tomorrow with growth numbers. Listen, the picture is just gloomy. I think there is lower to go. There's definitely some premium in here right now, given the geopolitical tensions. Probably not enough, some would say, but I don't think they escalate. Saudi Arabia came to show everybody the world is well supplied with oil, and that in and of itself is a reason to be short here right now.